because we have a research product, we already have access to all the perspectives around the world. And that makes it much easier for us to train our model to recognize different elements within these regulated disclosure and be able to make accurate assessment. So this has been a breakthrough, not only in Hong Kong, but also globally. I think we're the first company to use deep learning. I think this is back in 2019 to use deep learning specifically on IPO due diligence.
Welcome to the CoCoon podcast. My name is Erica, managing partner at CoCoon Ignite Ventures. Together with my two other managing partners at the fund, Theodore and Roland, we invite you to tune in here, where you will find conversations we have with founders and investors on the future and sustainability of work. We have been talking and listening to founders and investors in Silicon Valley, Southeast Asia, Greater Bay Area, and the One Belt region for over a decade. There's so much to learn through venture capital conversations, and we decided to turn these meetings into a podcast to demystify what actually happens on the ground. If you're inspired by these stories and want to work or collaborate with any of our founders or investors, then our call to action is reach out by searching for CoCoon Born to Fly on LinkedIn. We'd love to connect there. In this episode, meet Calvin, founder of Whispresso, and see how his company is transforming the way legal and financial professionals take companies public. Thanks for making time to do this podcast with us.
Thank you so much for having me, Erica.
I'm going to kick off with going way back. So I know that you were at HSBC for like 4 years before starting Whispresso. So what motivated you to become a founder?
There are a variety of factors, but I think first and most importantly, I'm really passionate about technology. So I came from a business school background. I wasn't a programmer, but I really found coding very interesting. So I watch a lot of movies about AI, like iRobot and all that. So it was my dream to build something myself. To build some sort of tech. It doesn't matter what type of tech it is. So I was really interested in learning about that. So and I back in business school, I was actually doing a lot of entrepreneurial exercise. So from projects to courses. So I was really into entrepreneurship. But I think for a lot of young people, including myself back then, it was a bit too risky to do entrepreneurship right away out of school. I know a lot of people do that, but coming back to Hong Kong, I ended up working at a bank. I think just to learn more about the landscape, to listen, to build relationships, and most importantly, I don't have to pay for my mistakes. When you become an entrepreneur, then you're paying for your mistakes. So I was really having a lot of fun working in the banking sector. I had the opportunity to connect with a lot of people internationally, travel the world. And I think it was a point where one of my mentors told me, if you want to do entrepreneurship, you first need to understand what your strengths and really listen to what are the problems out there. So I kept building a practice, no matter at work or not, just to understand, what are the problems that should be solved today. And it was, as I was doing banking, I saw a lot of, reporting problems. So from looking at a lot of unstructured data, mainly text and documents, to, how management actually analyze information and digest things. So I think back in the days, people were trying to be data-driven. I think every successful manager would look at data and make decisions, but there are only so many analysis you could do humanly possible, right? When we look at, for example, how our clients are performing across the region, there are KPIs that we look at, but there are things that beyond the limit of KPI. So how can we actually look at correlation between different performance? So you can't look at one thing alone. And a lot of these actually can only be unlocked by technology with artificial intelligence and machine learning. So I really built a keen interest in this field way before I left the bank. And I think it was to a point where I was actually building some very simple version of tech in-house to support the whole sort of deal origination as well as due diligence process. And I actually went all the way to the headquarters and tried to get approvals, money to do it. But it was really hard pushing technology at a bank. And this was back in, I think, 2016, when fintech wasn't even a thing in Hong Kong. All right. So, and I saw a huge problem. I also know all the technology that are being built out there. And it was a trip to, I think, Australia. So they seconded me to Australia, and I found that culture really vibrant. You know, everyone was trying to build new things. You know, a lot of time working in Hong Kong, you're so busy, you don't have time to think about, you know, entrepreneurship and what to do next, right? And through this trip, I really enjoyed and see people enjoying new ideas. They are using maybe a very a simple version of tech that I built. So I had a glimpse of, you know, how it is like to build technology and sell technology as opposed to being a banker. And that really got me started thinking, you know, when's the right time to do it? So the other factor I think would be a bit more personal. So age, I think, is a very key factor. As you grow older and become more senior at a bank, it's even harder to leave because you're more specialized, your pay is better, there's more opportunity cost, and maybe I will start a family, right? So the window keeps closing. And, you know, inspired by some mentors and also people who have done entrepreneurship, I made a very sort of hard decision at the time. I just quit and started doing what I'm doing now. Right. So a lot of people thought I was crazy. You know, there's nothing wrong. It was actually, the economy was quite good back then. This was 2017, mid to late 2017. So I quit HSBC. I actually took a month off just to travel around, just to get, I mean, a better sense of, you know, what's happening, what's been built. And then I started being engaged in more in the startup community. So I think that's a quite important way to start. And back then, Hong Kong didn't have the ecosystem that we have today. All right. So back then, nobody understood why I'm doing startup. I don't think it's a popular word. It was more like, oh, you're doing a new business, right? They don't use the term startup. And people thought I actually like to cook. So people thought I'm opening a restaurant. I was like, no, I'll tell you more about it when it launches. So that was quite interesting, but also tough. So it was just me, and I was actually working at a coffee shop. So I'm a person of habit. So I really don't like being stuck in my room. I force myself, similar to going to an office, I just go to another coffee shop. I actually had the chance to, you know, move to different places. Also let me explore Hong Kong and understand how people think, talk to people. So it was, I think, a 6 months period of exploration. All right. But I have the idea in mind on using technology to solve a lot of these reporting problems. So there's the passion, there's the personal sort of time frame factor that I really look at. But also lastly, I think you have a lot of questions to ask me, but lastly, it's about the strength, right? So why not restaurant? Why not a coffee shop or any other business that are popular at the time? I think starting a business is easy, but being able to survive in a particular segment requires some sort of competitive advantage. So with my banking experience and technological know-how, I feel that was my sweet spot. I can talk to people on both ends. So that is why I picked and started with Espresso.
I think when people call you crazy, that is really a compliment, because all founders are able to kind of gather the courage to go do something that most people are like, wait, no, don't do that. Don't do that. That's crazy. But that's exactly what we need founders for in the, sort of an economy and in the world. Now, let's go back to sort of when you were at banking and you saw all these problems inside the business, whether it was analyzing data or creating reports. Can we unpack a few of the pain points that you're solving for today for legal and financial professionals? Like, what's a day in the life of a financial professional, and what sucks about that job? Or similarly, you know, the day in the life or you know, the processes that a legal professional has to go through that really should not be done by a human. What are some of the pain points that you're solving for?
So one of my roles during my 4 years at HSBC was the Asia Pacific Business Development Team, so APAC Business Development Team. So that role, essentially, we have full access to all the data points across Asia, from how much each client is spending by product, by location, to, you know, what are being discussed in each meeting between the client and our relationship manager, to even how can we set right framework, incentives to encourage people to use a particular type of product. So we generally look at bank products into two different categories: the capital markets event-based product and also the flow-based product. So flow, we're talking about cash management, trade receivable finance, and credit and lending. And both of these have very different ways of looking at data. So when we look at event product, a lot of times we already know sort of what clients are trying to do in the next few years. They always update the banks about their strategic initiatives. And we're talking about very big projects like investing in major infrastructure, or doing a listing, doing a secondary placement, DCM, issuing a bond, and so forth. So the use of data would mainly focus on how can we extract and capture these very known data points and make sure we compete and do not lose any deals. All right, so a lot of origination is driven by where we can get the data, monitor them, and assign the right people to do it. Okay, so that's sort of the event side. Whereas on the flow side, it's more about farming and maintenance and how much effort we put onto building the relationship. All right, so on the flow business, a lot of data on credit analysis, what topics are being discussed in, say, core reports. Are there any sort of red flags, right? So we're dealing with a lot of textual data, a lot of discussions around within strategic meetings between CFO. And think about these clients, it's not a single location. We cover a global clients across like 20 different locations. So each country would have their own set of data, reports, and so forth. And we also look at efficiency ratios, right? How many product managers and relationship managers are covering a particular client, and how much revenue we're getting out of it. And we always try to, you know, strategically build in control different frameworks, incentive structure, even headcount sometimes, to facilitate the revenue growth process. But I think at that stage, I think banks are already an early adopter of technology. So there were dashboards, we're heading towards real-time data. So in the older days, I think not limited to banks, a lot of companies just refresh their data every month, and you're getting the month before. So you're not actually getting this month's data. So that actually is not very data driven, right? So we're all heading the right way, but there are some fundamental challenges that cannot be solved with dashboard or even real-time data. So all those are big data, great, right? But you still need somebody to read all these data from a variety of formats, right? It could be investor presentations, client reports, and so forth, and get insights out of it. So there's a search process, an exploration process, but there's also a understanding, comprehension. And these are the two major pillars Wespresso builds on, right? How can we find information and unstructured information quickly? And also, how can we comprehend and extract information from a variety of formats, from presentations, tables, charts, graphs, or as simple as text in different forms, list, and so forth. So that's sort of the principal technology that I'm really confident about, because no companies would actually commit an upfront investment in building something that they can still solve it with people. They can hire 20 analysts to read all of them. But that's not good risk management, because people miss things. We make mistakes. And the goalpost, the things that we analyze and look for, change all the time. All right, that's why there's always somebody reading all of this. And usually it should be the manager reading this, but when you're a big boss of a multinational company, you don't have time for that. So we see a lot of pain points around how data can be crunched, especially in the capital markets field, and how most large corporations actually don't have capacity for this. And sometimes it's repetitive. You know, you don't want to read all of them to make a decision. You don't have time for that. And that's why I really believe at that time, the problem that we're solving, and we're still solving that today.
I know you have like a few products. Let's get into one. Which one do you want to start with?
Why don't we start with Factify first?
Okay,
So,
okay.
yeah.
So Factify, yeah, like what was the main problem set that Factify is solving for, and how does it solve for that problem?
Sure. So coming from the sales side, a tremendous amount of effort is being put on drafting disclosures. Specifically, for example, in an IPO, you have to draft a 600-page prospectus in Hong Kong. So Factify is a verification software that verifies the information that are being disclosed in the prospectus. For example, if you say that the company has earned a certain amount of revenue, you actually need a supporting document like an audit report to support that. So you're not misleading investors. And the responsibility lies on the sponsor and ultimately the issuer. And a lot of time is being spent on this process because in Hong Kong, the lawyers are the one who primarily focus on doing this. They get paid a tremendously amount of money to advise, but also to verify the prospectus. And surprising to me, the process has been done this way for the past 10, 20 plus years. And it always involves, printing the whole draft prospectus out, circling up everything sentence by sentence, and going through each sentence to understand whether it's a fact or an opinion. And all these sentences are indexed on a separate spreadsheet, right? So as the lawyer go through the document, if it's a fact, then they would try to find a document to support that. If it's an opinion, they would then seek experts' opinion sign off or the director's sign off. And you're starting to build an industry of work just to support the due diligence of the prospectus. And I think today, as a lawyer, your value is on advisory, right? If your job involves a lot of button clicking and repetitive work, I don't think anybody enjoys it. It's still essential. It's still a core part of the due diligence process, but it's not someone with a university degree and vision when you get into your first job. So there's a talent retention issue. There's a work-life sort of quality issue. A lot of people do this overnight and have to send it to the printer to send out a first draft before filing to the regulators. So our goal is to really augment the process, right? We're not trying to replace what lawyers are doing. We're trying to use technology to support them to do it quicker and faster so they have time to advise the clients. And we're also trying to minimize the risk to improve the transparency by allowing everybody to go onto the same digital platform to view the process of verification. And it's a collaborative workspace. And later on, I'll talk about other products, but we try to build around an ecosystem that supports from reporting to drafting to the due diligence and external research and so forth. So this is the part where a lot of work are being put in, and we want to make this work easier, much more doable for the stakeholders in the capital market space.
The idea of taking a prospectus, underlining every single line to figure out if it's an opinion or a fact, and then verifying it with an expert or another data set sounds terrible to me. So I read on a newspaper that you guys are able to reduce the verification time by 75%. So what's your secret sauce? How do you guys do it? Can you disclose some of that?
Yeah, I think it's a conservative estimate. We've actually applied a lot of new technologies that have never been done before. Now, there's a lot of legal workflow tools out there in the market internationally as well. And a lot of them focus on workflows and project management, right? I think what's special about Whispresso is and our solution is the incorporation of deep learning technology. So essentially, deep learning, for people who are not familiar with this concept, is a subset of artificial intelligence, which is a subset of computer science. So within deep learning, the difference between machine learning and deep learning is that deep learning focuses on training by examples, as well as looking at different patterns, building a neural network around it, whereas machine learning is much more statistical. Deep learning is not always absolutely better than machine learning. You know, each of them has their strengths, but using deep learning, we're able to understand the context of documents, and that's most important. So we look at a document like how humans would. So when you and I read a document, we not only look at the content, the text itself, we also look at how the document is structured. So for example, in a newspaper, there's the title, and then there's different paragraphs, and then a chart, maybe a graph, when we're reading financial news to support that. So we're familiar with that. When we're reading an annual report, it's a bit different, right? There's different sections within the report. Some is in the format of a list, some is in the format of charts and graphs. So we subconsciously take those into account when we crunch information. But when we just purely use natural language processing, we sort of ignore the fact that this information is structured differently. When the classical NLP approach is you take every free text, put it together, and you try to identify key entities and information, right? Our approach is even taking into account formats. So it's like visual recognition, all right? But combined with NLP. So we also look at the content in combination with the format. And we took that technology and is able to provide a much more accurate prediction when analyzing a prospectus. All right. So when looking at prospectus, there are regulatory and also commercial requirements on each section of the prospectus. And each section is verified a bit differently. And by understanding the context, we can then understand how we can verify that information, which is very different from a keyword approach, right? Because a word could have different meaning in different contexts, okay? So that's, I think, a very new element we've added and really differentiated us from a lot of other project management tools. The other strength we have is because we have a research product, we already have access to all the prospectus around the world. And that makes it much easier for us to train our model to recognize different elements within these regulated disclosure and be able to make accurate assessment. So this has been a breakthrough, not only in Hong Kong, but also globally. I think we're the first company to use deep learning. I think this is back in 2019 to use deep learning specifically on IPO due diligence. And that is why we've got quite a bit of attention on this, on the media as well.
Congratulations. I know you have been an ICT award winner. And I think what you're doing is so relevant to a city like Hong Kong. Like Hong Kong, has more than like 150 IPOs a year. So I can just imagine how relevant this deep learning algorithm is for the companies trying to go public here, and the law firms are working with them.
IPO is the first step, right? What about after the IPO? Because IPO is where a lot of money is made. You can hire the best lawyers, best banks, right? But after you IPO, a lot of firms then become a flow, sort of the flow issue. You have to do regular periodic reporting. You have to disclose connected transactions. And for especially for the medium-sized or smaller listed companies, they lack the resource to disclose so much information. And most recently, there's a lot of ESG requirements around that. So our long-term goal is, this is the first step to get us into the door. But there's still a lot of pain points to be solved when it comes to disclosures, ESG disclosures and other sort of regular reporting, how it can be drafted and reviewed and comply with all sorts of regulatory requirements.
Right. So what happens after day one, right? IPO is merely the commencement of a good company. And so far to date, like with your customers using Factify, what kind of feedback have you heard, or how have the jobs of these lawyers who used to be the ones who were circling and going through line by line, how have they changed?
Yeah, it's extremely exciting to work with different stakeholders when it comes to a new piece of technology. And that's what drives me every day, to see a smile on their face. I think with a lot of lawyers, it's a mixture of learning for them, but also rethinking the whole process. Because I think law firms have been mainly selling manpower. I think a lot of times fees are being charged by the hour. But within the IPO space, it's a bit different. And that is why we're able to get in, because we are not hurting their fees. Mainly, IPO mostly is charged on a fixed fee basis. So no matter how much work you do, each IPO has a standard sort of fee. And also on the flow side, lawyers enjoy retainers, right? So we are actually saving the cost, the internal cost for them, and so they can enjoy a higher margin. So for the senior people, it's music to their ears. When they think of technology, they look at how these other players are doing. So with HKMA also launching the FinTech 2025 strategy, a lot of banks are already adopting technology. Lawyers, especially the IPO lawyers, their primary clients are the banks, right? So when they look at so much changes within the space, they know it's inevitable for them to adopt technology. But then within a law firm, there's so many types of technology and also verticals, right? From litigation to discovery to other aspects of law. So it's very hard for them to build internally a system that is so specific to certain workflows. So when we started talking to law firms, we found a very strong sort of reason for them to adopt technology. And that was also at the time when COVID started. So a lot of the lawyers couldn't actually physically be at the printers, right? They couldn't be at the law firms or the client site. So it became very hard for them to handle this 600-page prospectus, flying around different locations. So for us, it was a very good timing, and for the partners at the law firms, great timing to demonstrate innovation. A lot of law firms have KPIs to adopt tech. Some of the bigger ones are already building in-house innovation team and ecosystem team to hunt for solutions. So we went in a great timing from a partner's perspective. And they're also thinking, hey, I should make my juniors' life better, especially during these tough times. So it is quite easy to convince the senior guys. For the junior guys, then it's a question of know-how. So know-how is a term where within each law firm, there's a sort of a process around how we could do certain things for certain workflows. So it's like a knowledge management combined with process management. So we always work closely with a lot of these junior lawyers to rethink the know-how. So previously, they may be doing 5 steps to complete one objective. With Factify, they actually don't have to worry maybe the 3 steps in the middle. They just have to upload and then it will do the rest and you just have to check. So that really, changed their thinking, which for me, it's also, I think I always put on a consultant hat as well. And for me, I really enjoyed that sort of collaboration, co-creation process. And I'm also learning from their feedback all the time. As you know, I came from a banking background, so lawyers have their way of doing things, and we are always open to modifying, enhancing our solution based on their views.
It's so great to hear. It's so great to hear that humans get to do the work that they're really good at, and computers can help us do the data crunching that is very laborious and time consuming. I don't know if you know this, but Roland, in the early years of his legal career, Roland, our other managing partner at CoCoon Ignite Ventures, he was at the printers all the time. And I was always like, dude, what are you doing at the printers? I didn't see him for years because he was doing IPOs and he was at the printers for so long. And I'm curious, you talked about ecosystem earlier in this conversation. What other products is Wespresso building, and how does it fit in the ecosystem of big data, financial and legal support in the industry?
Sure. So just now I talked about Factify, and I always describe Factify as the right arm. So it's looking at workflows. It's also looking at drafting and reporting. The left arm is our discovery tool. So Discovery is our other product. It is basically a market intelligence software that looks at all the regulated disclosures, specifically company filings across 12 different global markets around the world. So we cover the Hong Kong, Shenzhen, Shanghai stock exchanges, also various other exchanges within Asia, as well as, of course, the US and Europe and UK. So the left arm allows us to collect all these data in real time and be able to using the same document comprehension technology and extract information from these different filings. So we have use cases from sell-side research, due diligence, to doing precedent search. So for lawyers, when they do a transaction, they have to look for deals that are very similar in a similar sector and in a similar nature. So they can know what sort of conditions, precedents, or terms to put in. So we also have use cases in that. But most recently, we have a major index manager, Hang Seng Bank and Hang Seng Index, using this tool to basically build thematic index. And we're also learning a lot from them as well. So essentially, for a lot of index managers, as well as asset managers, thematic investing is becoming a very hot sort of trend, right? And especially within the field of ESG. So you have asset managers who are creating ESG-friendly funds, environmental funds. But the inherent challenge within this segment is data. So I think more than 90% of these ESG themed indexes and funds rely on third-party data providers. So these providers include the biggest players like S&P, MSCI, Moody's, and so forth. And they have their own mechanism and methodology in scoring companies. And the challenge on this is you can only rely on a few key scoring providers. And you can't really control how they score it, right? So some of them have a very fixed criteria on how things are scored. I think just last week on the news, Tesla was taken off the S&P ESG index, which was, I was telling people, this exactly highlights the pain point today, right? You cannot control what is ESG or not. This is done by the index or the credit agencies. So where we're coming from is, can we actually empower everyone to do their own scoring, to filter their companies, right? So imagine you can just type clean energy or electric vehicle, just like how you would do it in search on Google. And our platform would right away give you all the relevant companies. But it doesn't end there, because we can actually comprehend all the ESG disclosure and gradually build different parameters for the users to score the company. So that's the direction we're heading towards, how we can empower everybody to build their own thematic portfolio. And it's really exciting. So using the same document comprehension strategy technology, we're able to extract very detailed what type of ESG KPIs are being disclosed, or even non-financial KPIs, from production data to maybe active users and so forth, and how you can benchmark a lot of these data and make them traceable, right? Nobody is going to believe in data providing or scores provided by a startup because inherently we are not as big as the credit agencies, right? But when the data is auditable and traceable, then it doesn't matter. The brand doesn't matter, because you're looking at facts, right? So as I think facts checks and having traceable data are one of the key themes this decade, and will more and more, from news to regulated disclosure, this will be one of the most looked at themes across data. So we see Discovery and Factify as two very successful use cases of our document comprehension technology. So when you ask me about product, the last one is more open-ended. So we have another product called Compose, which is our document annotation and automation solution. So with Factify and Discovery, what we've proven to the market is that this technology works. We can use this and be able to augment workflows, but also research, help you extract insights. What if you can build your own document AI and do your own thing? Because we have built our AI to do very specific tasks. You probably have 1,000 different tasks internally and documents that you cannot share. So I think looking in a very long run, how can we take the same technology but democratize it? So it's not only applicable to capital markets players, right? It's not for banks, not for lawyers only. It's also for every listed companies, every companies that look at documents and has to do reporting. All right, and that is some of the most exciting initiatives sort of we've been we had the chance to work with so far, and we already have gathered quite a few use cases, which hopefully I can share more in the future.
When I was first hearing about this from the financial and legal perspective, I understand how Hong Kong IPOs Factify, but when you started talking about discovery and connecting sort of what happens after a company goes IPO, we can actually analyze all of the data that they make public and provide the analysis to other investors down the road, and connecting sort of data with ESG. I think that's a really interesting purpose, because at first I thought, okay, so Wespresso is doing a lot of future of work related technology that helps financial and legal professionals. But right now or today, I'm learning about sort of the ESG element as well, like the types of data sets that you can carve out that enable investors to make better decisions. Now, during this journey so far, can you talk a bit about some of the challenging points? Like times when you were like, this is too hard. Doing a startup in Hong Kong, too hard. Trying to get big companies to use startup technology, too hard. Or trying to fact check everything, too hard. What were some of those points and how did you get past them?
I think I can go on all day talking about challenges. Maybe I'll just talk about the top sort of 2 stages. I think when we first started, a lot of times I tell people we have nothing. And in Chinese, it's 三冇. We don't have the three key components that a company should have. So we don't have a product, we don't have a market, and we don't have resources. So the hardest thing to do as a founder is how we can get traction on one of the three, or maybe all three together. And it was the most challenging thing to convince somebody, especially when we're focusing on B2B, a large company, to use a service or solution that has just been created by a very new company. So that's the biggest challenge. So at that time, I think Hong Kong did not have as big of an ecosystem as it has today. But still, there were a lot of very helpful parties and people who still is walking with us today. And I'm really thankful for that. So I think there are a lot of people who are from their heart trying to help. And we built a use case. I think one of our first use cases was looking at alternative data, looking at e-commerce and tender and hospital data, how we can use this data to better evaluate listed companies in these specific sectors. So ideally, these data are more real-time. They're not part of any annual reports and so forth. And we started pitching this to our clients. I think one of our very first clients was Credit Suisse. And we didn't even pitch them. We were just sharing what we're doing. And they were very genuinely excited about our ideas. And very quickly, it went onto a work meeting. So it was from a teach-in to an opportunity that we did not expect. So I think with a lot of help and luck and also preparation, we were able, very fortunately, to get to where we are today and still survive. I think today we're facing a different type of challenge with very high-end technology, high technology, we call it high tech. A lot of times it's about how we make people not only understand, but have the courage to step up and use it, right? So they're always early adopters with resources and always looking for solutions. I think that's great. But majority of the market are still people who are taking a wait and see approach. So they're trying to look for successful use case and just to replicate them. And a lot of these players don't see technology yet as a growth driver. They see it as a more of a inevitable thing to do, but still looking from a streamlining lens and a sort of compliance lens. But what we want to do is really help companies grow. All right. So that's what we call collaboration and co-creation. And I think in recent years, and I also often talk to a lot of the fintech community as well as some of the policymakers on this. How can we encourage banks and even different stakeholders within the ecosystem to not worry about errors, not worry about mistakes, because they should take a VC approach when trying new technology. For them, they can split a 10 million budget 100 times and try 100 different tech. Maybe 90% of them may not work as expected, but if only one of them work well, it may reinvent their whole business model, right? So take a VC approach, not only for the VCs, all right? They should take a VC approach for the internal innovation as well, all right? And also change the KPI. So a lot of them still look at ROI. Technology doesn't always generate a monetary return. When we look at GPS, right? When I was in 2007, having my first iPhone, I think there was a GPS app. I don't know what it's for. Why do we need a GPS? Today, nobody drive without a GPS, right? Do we pay for it? We don't, but it has a very high active usage, right? So a good technology should have a lot of usage. It's measured by usage. And probably through usage, it generates a lot of externalities, data, or hopefully revenue out of it. But revenue is not the only indicator. And corporates should understand that. They shouldn't look purely on ROI when they purchase a new tech. So they should change it. And yeah, be entrepreneurial even when you're doing this in-house. Because you may not use technology today, but you should still learn about it And someday when you're working, you may have your aha moment and know that there's something out there that can help you. And that's how tech adoption works, right? If you're only thinking about tech when you're facing a challenge, I think it's a bit too late. So I encourage people to think about these when thinking about technology, and that would drive adoption in Hong Kong. And hopefully we can have more scalability, not just for our startup, but across all B2B startup, more in Hong Kong and Asia.
100%. I think risk acceptance, especially for sort of mature, in your sense, high-tech companies, that's something that needs to evolve. Like you said, like if there's no pathway towards it, and when people make mistakes, then they stop, then there's no progress. Like, that's why there are pilots and sandboxes, whether it's 10 mil 100 ways or 1 mil 100 ways. There are different ways to try and make progress through failures. Last question, Calvin. If you're right about Rispresso, Factify, and Compose and Discovery, how do you see the future? What will the future look like if you're right at Rispresso?
Very, very interesting question. I a lot of times put a lot of imagination about how the world would look like, 30 years from now. And I think we're, already seeing hints of convergence on that. So some people talk about singularity. I think I use a much more simpler term, right? In the future, companies or even, policies maker would always take a data-driven approach, right? It's just what role do we play in a company in the long run? Where can we add most value, right? So our technology is about, structuring unstructured data and turning them into insights, hopefully incorporate them into the decision-making process. In the future, there could be companies that, run on its own, and you could only have a very, very lean management with a lot of, we're not replacing all the employees. Don't make that, misconception. There's still a lot of people in the group, but it's the management that is the bottleneck from what I see when looking at large corporation. You can only have one CEO, group CEO, which has to manage 500K employees for some companies. How can you put so much attention on everybody? So when you need to scale that big, you need technology to help you. So how can we gear towards a more streamlined and sort of objective-driven decision-making process? And what that takes is a very good reporting flow as well as data comprehension flow. So all the decision you make is traceable, auditable. And that is only when people would start to place more trust within decisions, at least the operational decisions made by machine, right? You can always make creative decisions, strategic decisions, but on the day-to-day operations, we cannot walk away from data and AI. I think we already see some companies attempting to create business that is 100% run by robotics. I think that's the right direction, but what I envision is where human and machine can coexist. So how can we use the information as a competitive advantage, use data as a competitive advantage, and make very quick decisions? Me coming from a large traditional banking background, see all the sort of pain points of management, managing a tremendous corporation, right? So many policies and so forth. Actually, all these are data, unstructured data. And if you have a properly trained model, you can make all these decisions within the snaps second, right? And then if you get challenged, then you have to just make it explainable and so forth. I think the world would be a lot more automated and AI driven in the long run. But also when I look at the innovations, amazing innovations within the blockchain space. I also see that being a core component of our AI technology in the long run. So a lot of industries will get disrupted because the middleman is removed due to blockchain, right? You always have this distributed network and so forth. We talk about smart contracts, right? But smart contracts today is still, from my opinion, a bunch of simple logic and formulas, right? When I explain it to my parents, it's like you have 4 different rules. If they all check the box, your contract is executed, right? And lawyers don't work that way. A lot of times you need judgment. So that's where deep learning comes in. Can we actually build a distributed AI, that can enhance the quality of smart contract? So it's not a binary sort of decision. You actually have some sort of computing problem to solve before the smart contract is executed. And of course, you can appeal the smart contract, but then all of this is traceable, right? And behind all this is driven by very high quality, unbiased data, right? So it's like now it's done by the courts and the lawyers and the banks. You have this sort of intermediary that do all these transactions. But when we move on to a distributed space, then it becomes your how good your AI is in the distributed network. So that's sort of my imagination.
Calvin, thank you so much. I really enjoyed talking to you about Whispresso. When you talked about trust early on in the conversation, I was thinking, I wonder when we'll start talking about the blockchain piece of this business. So I look forward to our next conversation about the distributed AI for financial, capital, legal industries. Thank you so much, Calvin, for your time today.
Likewise, and thank you for having me.
Hey, thank you for listening today. If you like what you heard, don't forget to subscribe. To hear more from entrepreneurs and investors on why they got started, how they got through the hard parts, and what they'll be doing next. If you're inspired by these stories and want to work or collaborate with any of our founders or investors, reach out by searching for CoCoon Born to Fly on LinkedIn. We'd love to connect there. Download more episodes or subscribe via Spotify or YouTube.